Hello everyone. I'm Dr. Pooja Sharma, working as an associate professor in Department of MBA. Here I am discussing the third unit of accounting for managers, in which the topic is financial statement analysis. I will cover the topic financial statement analysis. Before starting the topic, I just let you know this topic, the third unit covers the financial statement analysis and the tools of it, and the methods, tools, and techniques which helps in analyzing the financial statement. So the financial state, this topic covers the whole unit. So as per that, you can if you will read this topic, so you will cover complete third unit. Financial statement. Financial statements are those statements which are prepared by the companies. The main two statements are balance sheet, and second is income and expenditure statement. And another statement is cash flow statement and the audit reports of the companies. But companies are mainly analyzing the balance sheet and the statement. And why it is important? It is important for the future predictions. It is important for the financial statement, why the company should analyze these statements, should analyze the balance sheet, should analyze the income statement, to know the existing position, to know the current position, and to make the better decision for the future, and to make the better planning for strengthening the financial position of the company, for taking the correct decision, and for making the budgets, for making the plans of the future. So it is very important to know the existing position with the help of the financial statement analysis techniques, which we will study in the next slide. And these techniques helps in analyzing the current situation, current position of the company, which helps in decision making for the future. And in respect of the financial decision of the company, so this analysis actually helps in the deciding the sort of the company, for identifying the strength of the company, for identifying the weakness of the company, for identifying the opportunity where the company can do the better, and what are the threats company has to, although the threats are external, opportunities are external, but with the existing records, with the current situation, company can compare their performance with the other companies and see the market scenario, and access the like take the advantage of the opportunities, market opportunities also, and able to face the threat also with the help of this kind of financial analysis tools of and this financial statement analysis is part of financial accounting. There are the three types of main accounting: financial, management, and cost accounting. So this is the financial statement analysis is the part of the financial accounting. Tools of financial analysis, or methods of financial analysis and techniques of financial analysis. Financial statement analysis and financial analysis both are the same thing. And remember this thing, it can be come by the name of tools, by the name of methods, by the name of techniques. You have to write the same methods: comparative statement analysis, common size statement, fund flow, cash flow statement analysis, ratio, and cost volume profit analysis. Apart from this, one more analysis, that is known as the trend analysis. सो व्हेन यू विल रीड these सिक्स एनालिसिस, और एक और एनालिसिस जिसके बारे में आपको बताया गया, ट्रेंड एनालिसिस. सो दैट ट्रेंड एनालिसिस specify the trend of the something. Like suppose you just want to see the trend of profit of the company, you can make the graph of that and identify that. If you want to see the growth of the company, profit or sales growth of the company, you can make the graph of sales of the company year wise. So with the help of that trend, you can see the company is continuously, if we will see the profit, company is continuously having the upward trend or the downward trend or the constant. With the help of the graph paper or graph analysis, you can you can analyze the financial position of the company, and that graphical representation comes under the trend analysis, which is not given in that, but you can add the trend analysis in the tools of financial statement analysis. Comparative, when you will compare the 2 years data of the company. Common size, which is prepared for the 1 year data, which does not there we will not take the data of the 2 years. We have to take the data of the 1 year, in which you will give the weightage, and out of the 100% you will assign the weight to each and every account balance. In when we will compare the comparative and common size, in comparative you need the data of the 2 years and more than 2 years. Data of 2 years where you can calculate the absolute change, but in common size you need the data of the 1 year, and you will calculate the weightage of that. Fund flow statement is that statement which is prepared to know the position of the working capital, and to know the fund flow of the fund. And cash flow statement analysis, with the help of this statement you can identify where the uh, cash is used by the company, and where the cash is received by the company. Ratio analysis, in it is the analysis which is used by various company. When you will see the website of any company, you will have the ratio, you will have the 100%, you will have the ratio analysis in that of various account balances. The ratio is what? It is the relationship between the two variables, where you can just see the ratio. The variable can be sales and profit, the variable can be current assets and current liabilities. You have to identify the relationship between any of the variable, because nothing is fixed in the company, everything is changed, everything is changeable. Like sales is not fixed, profit is not fixed, salary is not fixed, fixed expenses is not fixed, fixed assets are not fixed, current assets are not fixed, bank loan is not fixed, share capital amount is not fixed, loan amount is not fixed, nothing is fixed. In long term period everything will change. So in ratio we will compare, we will identify the relationship between the two variables. It can be anything. Suppose if you will take the example of the current ratio, here we will identify the relationship between the current assets and the current liabilities. Remember this thing, when you have to write the definition of the ratio, you can write the definition on the basis of the variables. Suppose current ratio is what? It is the relationship between the current assets and current liabilities, and it becomes the formula of that also. So ratio is the relationship of variables. You will just identify, you can calculate in three forms, either in fraction, either in percentage, or in terms of the number of units, in the terms of the numbers. Now the last is cost volume profit analysis. It is also known as the CVPA analysis in short form. And remember this thing, this technique is used only the BP, break even point, is one of the technique which helps in determining the cost volume profit analysis. Cost volume profit analysis is very important for any of the company. When they started the business or running the business, it doesn't matter, company has to calculate the BP break even point at every moment of time, and company should know this point to reach at the level of the profit, to reach at the level of the minimum required production point, and to uh, just make the profit of the company. So CVPA is, again you can just say this is the break even point. As I told you, it is what is the purpose of this. Comparative, 2 years data you'll compare, and comparative analysis statement, common size statement. Here the example of the guidelines of the, here you can see the example of the comparative statement. Comparative statement, in you comparative statement you can see the fixed assets are given, and fixed liabilities, current liabilities and current assets are given. So 2 years data is 2 years data are given, 2006 and 2007. Here you can find out the absolute change in that. The fixed assets are increasing, so you have written absolute change 12 lakh rupees, it is in positive note. In investment there is no change, so you will not write anything. Current assets, in current assets the liabilities are current assets are decreased. So you have write in bracket, either in bracket, or either you can put the minus sign in front of the 9 lakh. It depends on you. Total assets 3 lakh. Total assets, change, absolute change in the total assets, that is 3 lakh. In the same way, in liabilities you will write the same thing. Reserve and surplus is increasing, so you have written in that. Current liabilities are increasing again, so you have write the absolute 1 lakh rupees change in that. And everything is, and in liability side, both the account balances are increasing, and other two balances are, there is no change, so you will not write anything. So what you have seen, you have to identify simply absolute change and the percentage of that. Percentage, how you can calculate? 12 lakh. And what is the percentage of the 12 lakh? And you just percent calculate the percentage on the basis of 72 lakh. 12 lakh divided by the base year is 60 lakh. Like 12 lakh divided by 60 lakh, multiply by 100. 9 lakh divided by 30 lakh, multiply by 100. In liability side, in reserve and surplus, 2 lakh divided by 10 lakh, multiply by 100. In current liabilities, 1 lakh divided by 10 lakh, multiply by 100. Likewise, you can calculate the percentage change. That's all from my side. Thank you so much.